Welcome to TradeTheMBI.com. This is John. This report is for the 1st of May. What a beautiful way to end the month. Okay, so it was pretty simple. We talked about it. Above 50%, you could be long. But below the 50%, not likely that things were going to go all that well. We saw exactly what I was talking about from a DOC, which would be that spider effect here, where cyan crosses back above green, and this produces midterm buyers and the short-term buyer fade. And again, this is getting into that situation, and particularly strong in a daily, where you don't have a reset of the steel back below cyan. Once it crosses over here after about 3 or 4 days of it, you get into an extended period. Now, when it pops above the 13, then you've got the positive, the effect of it coming from below. But once it dips back down, the weakness. That's why we weren't expecting really much above that 50%. This was all a situation of where bulls had to prove that they had enough, and it was a little too early, considering new fund money hasn't come in yet. But now the lockup period is just about to end. But we were waiting for this secondary dip of the shakeout because it had still remained relatively weak, and that's why you have this little line here at the negative 13.5. When you get the histogram below that range, you're not going to get much of a run of any kind. This was pretty decent up to the 50%, but completely failed from there and accelerated. We could talk about the MBI readings. Again, we had talked about the fact that the red had led. But once magenta took over, that was still strong, and that's what was enough to get it to push towards that 50% number. But pretty good cascade. Now, still magenta over yellow, which is, I think, reasonable enough to hold that 23% at this particular stage. But you get some serious negativity from there, from the shakeout standpoint, even on the NASDAQ as well. So, yeah, is it unusual? No. The question really now becomes, how close do we get towards the zero? And without MBI weight taking too strong a lead, it's ahead, but you still have magenta over. We may see a basing somewhere above the 0%. If that's the case, then you have effectively created that higher threshold. The real problem becomes if we get a spike of MBI white as we're starting to have magenta break below yellow in this particular case. And we'll see this on the earlier charts of 50K and even the shorter time frames of 5K or 5-minute chart. It'll all become clear. Treasuries did not much of a move. It's still way outside the line, but there's less and less attractive things as the inflation bite continues to squeeze more and more. In this particular case now, gold has filled, oil in this one, has filled back positive extremes from its original breakout. Still over 80. There was an increase in crude reserve. Could be an indication of slowing economic activity. That's something that we have to weigh on. The real question becomes, as long as the geopolitical front stays quiet, will there be a continued easing of that? It's too late for what the CPI numbers and that, because they're going to reflect the added costs coming forward. It's one of those lagging situations. So, and of course, Euro took a puke on that one because nobody was buying anything. Everybody was running for the hills. So you think, of course, they're going to run to crypto or gold. No, they needed to get out of the situation pretty quick. Yeah, I got a little. We call them zanzare. It's a mosquito. It's because I opened the windows on a spring day. My mistake. Anyway, the gold right down to the 61%. And, we talked about this. It needed to fill positive extremes that had been lying around. This was the last set of them, but then there's this other series that was the original breakout move. Will we get all the way back down there? No, it's hard to say at this particular stage. It would be a little early to assume that kind of depth. But if there's continued selling, then it's going to be a problem. And you can see the crypto. Everything was supposed to turn rosy for that, but as we pointed out, positive extremes, and they begin all the way down here. And all we've done is just filled them completely normal. Nobody was expecting it. We were. Ooh la la. ETH, much more pronounced. You can see that it's filled all the way from the previous one, and it's already started into that secondary cascade of positive extremes from way back. And we know that these things fill, and people get caught surprised. Everyone was wanting to jump into that bandwagon because, oh, it was so exciting. From our 50K standpoint, we talked about it. This started the positive extremes from this original breakout, and we filled that, and then we got carried through because once that selling started, it just kept going. But that short setup took it from there. That was fairly clean. It'll be interesting as I've developed a setup with my additional paint bar that will make some more adjustments from these and get that short signaling to follow closer to our colors. So still working on that one. It's always a battle between where you end your long versus where you begin the short. And that's just about taking aggregate. But from a 50K standpoint, we started with that MBI white spike. It's right up here. We went red because magenta dipped over. It held on for a little bit, but once it crossed below and you ended up with that white spike, it was a full trigger right there, and boom. Not only did we hit the zero, came all the way down, filled that positive extreme from right there. We do have the dip below the red lines. That's a little bit more of extreme when you get into this original dip, but it's heading towards that direction, and I would call this all pretty even. You're still above 5,000. This is, not anything dramatic. Those number valuations are way up there given what we're seeing from guidance reports. And some of them are still reporting positive earnings, but again, we talked about that it was going to be a misleading situation because they were going to take advantage of the fact that you had an inflationary situation where they didn't have to necessarily cover the replacement cost or what the new costs of things were going to be. And now that's starting to be reflected, and that's problematic. So here it was from an intraday standpoint. It started pre-market. There was a nice little boost right before. Once the market opened, though, the pink bar tells it all. It's all red. It never changed. And we're still continuing to see some softness going in here to post-market. And it's a holiday in a lot of different places, particularly even here in Italy, of course. You have the Russian Orthodox holidays starting in that. So May's going to be fun. And, everyone talks about sell in May and go away, but, that's an old adage from before quantitative easing was a thing. But do we see the likelihood of Fed intervention? Not so much. What we do have to pay attention to is the credit risk that exists out there. We saw another bank go under, and this is the reality that's the hidden gem hiding behind the scenes that they've been trying to conceal. They're allowing all of these banks that have bought all these bonds at, tiny interest rates, unreflective of the reality, and they're letting them mark them to their full value when they've had huge losses, and they're just sitting on these massive unwritten losses, and they've been allowed to mark them to, their current value. That expired, and as soon as that expired, you already saw some banks that were able to shore up their situation, were able to do so, others not so much. And, does that pose a systemic credit risk going forward? We'll see. You throw in the real estate for a commercial situation, it's problematic. So, is there a cascade potentially out there and developing? Yeah. Will it happen? They're going to do everything they can to stop it. So, and that could mean, a flush of new infusion from the Fed, at least quietly from a banking side. We'll see. But either way, market's going to be reacting to these things, and all we have to do is just follow the readings and just go with theirs. So that makes it simple for us. As always, though, I'll be sending out indicators. Everyone will be set to go. They're already out. So everyone's set for the start of the month. Have a good one. Trade well. We'll talk to you later.